Welcome to the Trading Lounge and the day ahead report, and here we're looking at the US 30, the Dow Jones. I might just go to a daily chart actually and just have a look at the bigger picture. Right, so this is the daily chart. If we take this, just to give you an idea, just take from this low here, we'll be looking at a 5-wave structure to the upside. So we've got that strong wave up through here, which would be this wave 1 and wave 2, and then we're looking for this third wave to come into play here as such, like that. And if you follow Elliott, then you sort of understand that there would be a 5-wave structure in each of these. So there'd be a 5-wave structure in here. There'd also be a 5-wave structure in this leg here that we're chasing here at the moment, or following, tracking. So that would be basically up for 1 and back for 2 in there, and the strong third wave occurring through here. So we're looking for the top of this third wave in here, and we're looking for a 4th wave and then a 5th wave up through here to take us into this particular top area there. So that will give you some sort of idea of where we are, and that's pretty much the same for all markets. So when we're sort of looking at the Dow, we're looking at this here. The S&P 500 is probably a little bit more significant. So the Dow would be looking at the 14,000 shortly. So when we're looking at the S&P 500, if I got that here, we are at the 1500 here. And the normal thing is, I know that we're in a strong bull market, we're in a strong third of a third wave, and so forth. So we do have that bullish bias, really sort of cranking in. But as they say in the art of war, when you're in peace, you prepare for war, and when you're at war, you prepare for peace. And it's the same with trends and corrections as well. So when everything is really positive, you've got to start to look for any sort of negatives in the market. And one of them would be the S&P 500 at 1500. Not that it's going to slow it down that much, but it's just sort of worth noting. The real element would be in the Australian dollar if that develops a large 5 waves to the downside, because the Australian dollar's got a bit of a little habit of leading the US markets, oddly enough. Don't fully understand why, but I just know that's the case, so we tend to sort of watch that. So that's one thing we'll be looking at. So here we'll be looking at pretty much a sort of 3-wave sort of correction here as such before we sort of move on to the upside, so to speak. So that's sort of, as I mentioned, it's something we just need to navigate through here. If you were trading up for long, at this point or even further down through here, then this would have been the target zone area here. So it's likely the probability of a larger correction here is fine. Look, we may even just push up here further and so forth, but we have to expect it to give us something here. So just being mindful of that and kind of lining that up with the rest of the world as well. And also leading stocks as well, because it is the leading stocks that we sort of reflect this back into this sort of area here. We've got strong earnings coming out of the US, which is driving the market to the upside, and the manufacturing figures coming out of China as well have been positive. They're employing more people back in the manufacturing side of things, and Draghi from the ECB is his speech on Friday, I think it was. Didn't say a lot, but he said he'll be there to do whatever it takes. That was the real sort of clincher that was some time ago for the euro to be positive, but they're still it's all looking quite sort of positive within their in their loans to the central banks, paying that back a bit earlier than expected. So just positive news all round as such, and that's the European markets here. We've seen the DAX lift off here. If you're trading the DAX here, then the count would be, say, from this point down here at the this price point here, we'll be looking up for the 1 here, back for the 2. This will be the third wave here, because it's got the strongest wave in the centre here where the most volume comes in. So we'll be looking for a wave 4. Wave 4 would pull back 38.2%, so somewhere close back to the 78 there. If this market pushes up to the 79, then that correction will be across here, and then we'd expect it to come back to the 78. 50 there, so just see how high this goes up here first. So the correction, if it's from this subgroup 2 area here, the 65, 72 and the 80, then expect it back to the 78, 16 sort of area. If that's not the case and it pushes straight up, then expect that correction to unfold across here, and that's sort of the 1, the 2, the 3 and the 4 and the 5 further up. So all sort of positive there, and the same for the UK markets as well. At 6,300 here. Now this is reasonably important through here, because the 6300 is the top of minor group 1, so from 6,000, 100, 200 and 300. So we can expect a correction across this price point here. And if support is found on the 6300 after that, then we can look at the target of 6500, which would be the medium level there. The FTSE 250 is playing out across the 13,000, so that's a weight there that could implode a correction here as well, and the S&P 500 at 1500 as well. So it's the sort of area that you would trade to, and then move out from that point. So I'm just sort of looking at this here. We've got 1, 2, 3, 4, 5 for that one. We've got the 1, 2. So there'll be a little third, fourth wave here and a fifth wave here, then an A and a B and a C across here. But that correction in the first swing should stay in group 1 here, 10, 20 and 30, and also group 2 here, 65, 72 and 80. That will be the range there. And the volume would support that situation there as well, because that resistance will become support while it's moving across the 6300 there. The Australian market as well is pushed up really nicely. So if we look at this count from here, the idea that from just under the 4800 here, looking at this as a sort of a corrective pattern. So the count here would be basically up for 1 here, back for 2 here. And then the third wave is 5 waves too, which would be the 1, 2, 3, 4 and 5. That's the third wave. This would be the fourth wave. So this would be the fifth wave moving up through here. So it would be the 1, the 2, the little third and fourth is here. So we'll see a fifth wave here, and then we'll see, so the cash will open up on the Tuesday. Oh, this will be trading anyway, so not going to make a lot of difference. But anyway, so the move's already priced in, so we can see a move up through here, then a correction across here. So a move up and across, and then you're looking for 72, 48, 72 as support for any moves up there. Now the commodities have been a bit negative. However, the US dollar has dropped down. Commodities are traded in US dollars, and that should offer some support. Let's have a quick look at those. So looking at copper here, very central to the base metals. In fact, they call it Dr. Copper. But what we were looking at through here is that we were looking at a couple of elements here. We're looking for, well, first of all, this 3-wave correction through here. Okay, that's in 3 waves. So that means that eventually that high should be taken out here. Okay, and then in sort of backing that up, supporting that a little bit in Elliott terms, if you get 5 waves in a particular direction, then after an A, B, C correction, then we should get another 5 coming through here. So this 5 wave here, this impulse wave, supports the fact that we will be making a new high above here, but this here alone should do that as well. So that should all be interesting. I don't know if the wave from wave B, this is a zigzag correction here. It's 5, 3, 5 structure. I don't think that 5 waves is actually finished for the C wave down here just yet, but let's see how that failed retest goes at the 65 here, because that 65 is the bottom of group 2 here, and support on top of that there would be the first leg to the upside, but it's not quite there just yet, so just give it some time to develop. We want to see a little impulse wave moving up through here, and then we can kind of go along at that stage. So if we look at BHP, the US BHP, as a guide for the materials sector, what we were looking at through here is we understood that the numbers 78 is 8's profit taking number, 80 is a larger profit taking number, and we're looking at a correction here. We're looking at a little 5-wave structure down through here, as I mentioned. And then that will be just the A wave, then we'll get the B wave, which is unfolding now, and then we'll get the C wave. So basically a 3-wave correction here. Once that's completed, then we'll see 5 waves up through here, making the first high above the level. And this would be the trading levels classic sort of pattern, where I'll just explain the classic pattern a little bit here while we're here. This one here. So basically I call this the arrival. So it's basically the arrival. The reaction, which is normally in 3 waves, and then we get the first high above the level, which is normally in 5 waves. So we don't chase the breakout through here, because after it goes through here, then we're looking for a larger ABC correction. So an A and a B and a C wave here. And once we've got that 3-wave swing, which we know is a corrective pattern, then we start looking for support on top of the 80 here for a move much higher at that stage. That's what we'll be looking. So that would be the setup there. So it's just basically a market coming up, finding resistance, going up through here, going through the correctional stages, and then finding support. So going from resistance to support. And the idea to understand this, or the reason to understand it, is time is money, and that's time. So getting your timing straight. And this pattern occurs in all time frames or all degrees of structure. So it's worth noting, in Elliott terms, it's normally the top of the 3rd, the 4th, the 5th, the A, the B, and the C, and then the next impulse wave going up. But it's nice to understand things in different ways as well, because we all learn in different ways. Right. So copper, yes, we're expecting it to move to the upside. If I've got a US chart, dollar chart here. So we've got the, this is the US dollar here. This is a 2-hour chart. It's going back a fair way. So basically we knew that this was a rally through here. We're just trying to figure it out and work it out. But it's starting to let go of it now. And we're starting to see the euro push to the upside and so forth. And we tied the DAX and the Bund into that, and the other bonds and the rates and all those sort of things. So we're sort of on the right track here. We expect this to come further down, eventually take out these lows here. But lower commodity prices, of course, lower dollar prices give the commodities a bit of a boost as they're traded into US dollars, which reminds me of the Iraq War. With many traders thought the war was over over holding the US dollar as a base currency, as Saddam was starting to sell oil in euros and not US dollars. But I suppose there's many stories and things that make up things. So anyway, so the oil market as such, we are still is where we are through here, but oil follows stock, and we're still expecting further upside there for this. But as I mentioned, the S&P 500 at 1500 is likely, with probability of giving some correction. I know that the larger trend is in a strong bullish market, so it can prove me wrong and continue to go to the upside. But we know our numbers to trade from if we get support above the 1500. But this should follow stock, and we'll just be looking for a 3-wave swing here, very much the same as this one here, before we see a push higher for oil there. And gold and silver pretty much got the same count, and we'll feel 1650 is a medium level, an odd looking number, but there you go. So 1500 and 1650 are medium levels, and that will play out. So we can expect a bounce from here, and tracking this little 5 waves, wave 4 here down to wave 5. This will also be a little wave 4 in here. So we've got little 1, 2, 3, 4 in here. Maybe I've got that here somewhere else. Thought I might have did some work. Okay, well, here's a 15-minute chart. So this was the wave 4 here. So the A, the B, and the C here. So we've got this little 1, 2, and 3 down to here from here, because it'll be 1, 2, 3, 4, 5 into there. A, B, C for the 4th. But this little 4th wave here would be a smaller version of this larger version just here, because markets have their own personality, and their personality is made up of certain patterns, and I find that each market has got about half a dozen of its own patterns, and they just are reoccurring patterns. They can be skewed around large numbers and also different sizes as well, and this would be a typical example of that. But anyway, cut a long story short, this is corrective because we've got 3 waves here. We can expect further lows down here, and that would bring us into the 1650 there. Let's have a look at FX. Okay, the dollar here, the US dollar, you can see that it's dropped down, and if you're trading the euro, you'll know that the euro is pushed up strongly. And yeah, so look, we're just looking for a little five-wave structure to the downside. It's broken down, but it still hasn't broken through support here just yet, and it also hasn't retested the 80 here to confirm that it's going to be sent back down again as well. So there's two things that still need to unfold somewhat. But in the bigger picture, one way or another, we're still looking for this low to be taken out through here. So still a fair way to go. So it's not really confirmed that we're on that track just yet, but we'll see here if we can get this five-wave structure down through here, then we will get three-wave retest through here, and then down again. Now, if this extends to the downside here, then that retest will come into this supply zone here, this this support system over here. So that support really has to become the resistance, and then rejected at that stage, and then we know that that pushes down further. In terms of the flip side of that, of course, is the euro. It's just a daily chart here, and we're pushing to the upside. But a couple of interesting things here is that this is a bit like it is really the classic trading levels pattern, where we have the arrival, the reaction in an ABC pattern here, and then eventually the market does find support over here. Now, we would have gone long from this point here if we had, because this is also group 1 here. 130 is minor group 1, and this 133 here is actually sub-level group 1. So support on group 1s, the 1, 2 and 3, send the price to the next highest number. So support on top of 130 here would put the euro at 150. So that's, I know it's a long way up, but that's just the way we play. There's nothing ever too low or too high in the markets. Always what we trade, just trade what we see and use support and resistance and Elliott to help us in that direction. But what I'm pointing out here is that this is the classic trading levels pattern. So it was resistance and then became support, okay? And the same with here as well. And we're using group 1 here to sort of help us through that process. And also group 1 here as well, just a smaller degree through here. Now, support here would help us get to the next price point, which would be the 135 up there. And the 135 is important because it's the halfway point between the 130 and the 140. So it's sort of like a balance line in there, and that will play out through there as well. On the smaller chart here, you know that we were working off the 133 here, but we were also working through this particular correctional pattern here, and it was a bit of a nightmare, but it finally broke to the upside. And there's a couple of little things here that you can work on. You know, support on the midpoint here or here, and also just looking for the break. And one of the keys was with the US dollar breaking lower as well, which it did, and Draghi's conference sort of helped move that along a little bit. But now we're moving up, and we're looking. This is probably a couple of ways to count all of this in here, but I think it's, for the time being, it's just important to work out that this is a strong part in this wave structure here, so we can consider this wave 3 here. So we can consider wave 3 to be at its high here now, or we could have one more push to here. But in one way or another, we're going to get wave 4 here and wave 5, and then we're just going to move across this section here in terms of the classic trading levels pattern once again. So there's not much more of an upside to here. Yes, we can hit it to here, we can come back to here, and then we can push up for the first high above the level, and then there'll be a correctional process through that as a wave 2 pullback through there. So now, just to sort of bear in mind, the S&P 500 and the euro should be moving together within the half-hourly chart. So look for those correlations through there as well. The Australian dollar is going in the opposite direction, so it's moving to the downside here. So in this downside here, we've got to count it like this. We've got to pull this in as wave 1 and wave 2 to here, and then wave 3 folding down through here. This is not quite finished, this little move down through here, but there is this little bounce off here. Does appear to be in 5 waves, so there's going to be, this is 104 as well, so it's a big number, and we can expect some sort of retest into the supply area here. But point being is that this will be it's going to get choppy within this zone here, so be very careful about that. One of the bigger points here that I want to point out through here is that if this is the Australian dollar's got a good habit of leading things now. I'm not that concerned at this moment. You'd need to have a look at the daily chart and the weekly chart to have a look at the bigger picture for this and possible E wave down here as a primary wave 4. So that it can come down much further. And if it's going to come down much further, then this is how it's going to come down, and need to be sort of aware of this. So down for 1, back for 2. Down for 3, back for 4, and down for 5. Now, if we get 5 waves in here, that means that we get a 3-wave counter trend, and then we get another 5 waves down through here. So that would take us even further to the downside through, down here somewhere. Five waves here will give us 3 waves here, and then another 5 down there. Now, I'm not completely sold about that just yet, but if we only get 3 waves down here, and we can label as an A and a B and a C wave. So once this leg down here completes itself, if this wave 4 moves up here and moves into the price territory of wave 1, then we can count this as an A and a B and a C wave, and then we'll be looking for support back up through here. Because when you're working across a level like the 105 here, normally the distance above that it goes, say close to the 106 there, is normally the same equal swing to the downside. So that 104 and the 103.72 area here, this zone 2 here, can really create a really good support. But all I am saying is that in both cases, once this wave down here completes, there will be a bounce one way or the other, but we won't know straight away if it's going to be a wave 4 or this is going to be the low of a wave 3 and we're going to be pushing higher. So it's something that we do need to work through here, because I like to be quite confident about putting something out, and if something is a little bit iffy, well then we've got to point out that it's an iffy situation, because if this is going to continue down like this here, then we'd expect the S&P 500 to be in the same length as well. We just got to sort of see how that sort of all pans out, and the end of the US report earnings season there as well. So that's what's going to be after that is a case in point. So anyway, the development here is quite critical, and the Australian dollar can lead the global markets. It did that on the way up, and it's turning now. So we just got to kind of see how those indices play out as well at those larger levels there. How large a correction we're going to see there. Alrighty, well. That's it. So the Australian markets are closed today, so we'll do the robo trades on Tuesday for them, but the UK markets and the US markets will be fine. So good morning, good luck, and enjoy the day ahead.